Well, hello everybody and welcome to your Calgary market update for June. We've got a couple big announcements to take you through with this market update. So let's not waste any time and let's get at it. All right, so the very first one that we have to cover is, of course, blanket rezoning. So this is a historical change for land use across the whole city. By far, the most public engagement that any motion before council has ever seen. 900 speakers, I believe, nearly 2 weeks of engagement to talk about the prospect of changing the base zoning from RC1 to RCG across the whole city. So this was debated. Lots of people came out and spoke about this. We've talked about it on the channel before. And this was approved. This was voted through by council. And so the zoning for all of Calgary will be changed here in the next few months. Okay, so a couple key things to take note of for this is that just because the zoning has changed, it does not mean that all of the properties can be easily redeveloped, okay? There's still lots of limitations within the bylaw for stuff like setbacks, for parking, and for lot coverage that will make many of the lots that are traditional single-family homes not suitable for multifamily development, okay? But what it does do is it removes the requirement for developers of up to 4 units to apply for a rezoning, which means that the projects are both shorter for developers and less risky because they don't have to risk buying something and then not getting the zoning approved. Okay, so this is a big deal. Another thing that's important that was amended throughout all of the debates is that row townhouse style units have now been moved from a permitted use as what was recommended by the Housing Affordability Task Force to a discretionary use, which means if you want to build row townhouses with basement suites underneath them, it's a discretionary use. So if the development authority doesn't feel as though it's in keeping with the neighborhood, and if there's enough resistance from the community, then it's not necessarily a sure thing that this will be approved. Okay, so this has gone. This has taken place now, and finally, I guess we can move on and see what this is going to do. On a lighter note here, our airport doing really well. And to me, if you've got an airport that's doing really well, it means that your city is very healthy and doing well too. And so we're now the 4th busiest airport across the whole country. And we're only the second one across the country to achieve the same passenger levels that we had prior to the pandemic. So that's good news. Big news here just today actually is that the Bank of Canada has gone and adjusted their interest rate. So for the first time in 4 years, we've moved interest rates down just by a quarter point right now. So the key lending rate was 5%. Now it's 4.75%. And most economists are feeling that we're going to see another a rate cut later this summer in July, okay? And I think this is because most of the economists feel that the right place for the key lending rate to be at long term is closer to the 2% range, so much more affordable, kind of like what we had a few years ago. But the Bank of Canada is going to work its way there to manage inflation and, of course, housing costs. Some more local news here now. Eau Claire Mall, get one last look at it if you like the look of it, because it's about to be demolished, all right? So it's going to make way for a new C train station, the northernmost C train station on the first stage of the Green Line expansion. So it will run all the way from Eau Claire down to 130th Avenue in the southeast part of the city, and then the second phase will take it across north of the river and then go up Center Street. But Eau Claire Mall is now coming down. You're going to see it get demolished here over the summer and the coming months. All right, so let's jump into market sales statistics, okay? It's a bit of an interesting month because I feel we're starting to see a bit of a slowdown here, okay? The interest rate adjustment is going to affect this, but I do feel that the sales statistics are indicative of a little slowdown in our market, and I'm going to take you through why here in just a few minutes, all right? So last month, housing prices eclipsed the $600,000 barrier to come at just under $604,000. And this month they're up just a tiny little bit, right, to $605,000. But if you're looking at the year-over-year sales statistics that Krebs likes to show, it's showing this increase of 9.5% year over year. But that's not what it actually feels like right now when your previous month was $604,000. All right. So at any rate, we're coming up, going the right way, but just a little bit. You can see it here on this graph that we're starting to taper off here now. All right. Calgary got off to a very hot start in 2024. We saw increases of over $10,000 in the first 2 months of the year. And then it started to level off, and now we're seeing it plateau just a little bit. All right. And this is very consistent with Calgary's traditional seasonal cycle, that we will often have really busy early parts of the year and then it levels off. And if you look back here, that's what happened last year. The pricing settled at around $570,000 and it stayed there for half a year, for 6 months, until we hit the new year and it took off. I think that we're about to see that here now, and it's going to be around that $605,000, $610,000 range. Maybe the interest rates make a big change, and I look silly for saying so now, but I feel like we had a really early start to our year, and now we're starting to see things level out just a little bit as we turn the corner into summer, okay? And another reason why I feel this way is the progression in sales. So from last month's data to June, from April's data to May's data, May's update and June's update, we went from 2,881 sales to 3,092 sales. But you can see here last month, we were up by nearly 8% compared to year-over-year numbers. Well, now we're not seeing as huge of a gain here, all right? We've actually given up. We've got a fewer sales in May's data than we had this time last year, okay? So slowing down just a little bit. At the same time, though, as we're seeing a pile more listings, all right? So for May, we had 3,400, and we had an 11% gain. This month now, we've got 4,300 new listings and a 19% gain year over year. So more listings and fewer relative sales to me means we're going to start to slow down a little bit though, okay? But it is still a seller's market. Don't get me wrong. It is very hot out there, and it's going to stay that way for quite a while because we just have so much ground to make up in order to meet the buyer demand that exists out there right now. So 2.5 months is the metric that I like to use for a balanced market, and we've been below that for well over a year. And you can see here now that we're at 1.1 months worth of supply, okay? We're coming off 2 really hot months where we had less than 1 month's worth of supply. And if you look at how that stacks up compared to this period last year, we're a little tighter now than we were last year, okay? So I feel like we got a bit of a head start. We started really quick in the early months of the year here in 2024, and now we're just taking a little bit of a break, and we're starting to see months of supply creep up, although it's still super low. So why do I like 2.5 months worth of supply? So one of our very shrewd agents asked me this in our live update meeting the other day, and I wanted to show you why I like this. So this is a graph going back over the last few years. Krebs reports this every month, but this is the total months of supply, total months worth of inventory. And if you go back to early 2021, you can see where we crossed over this 2.5 months worth of supply threshold. And ever since then, we have been in seller's market territory, right? So if you've got more demand than you have supply, then you would expect prices for that real estate to go up, right? Well, that's exactly what happened after that. So with that exact same time period in early 2021, you can see here how prices have started to go up considerably since then, all right? So that's why I like 2.5 months worth of supply to tell me whether or not we're in a balanced market or a buyer's market or a seller's market. And I think that is true, whatever market you're looking at, and not just Calgary, okay? So let's look a little bit more closely at the segment data now for specific asset classes. So last month we had some good numbers here. All of the categories have gone up except one, and that's the one I want to chat a little bit about with you here, okay? So got good price progression here across all of them. You can come over here and see that we've moved up nicely across all of these categories, with the exception here of apartment style condos, all right? And I want to touch on this for just a little bit because this is another one of the things that gets lost with the way that Krebs reports its data. If you look at May's stat package, which was April's data, it showed an average apartment condo price of $346,000 and a 17.7 year-over-year gain. All right. Well, they've shown that same statistic in June now, but we've actually come down in sales price for the month of June. Okay, but it looks like an even larger gain year over year. So you really do have to follow along to make sure that you're not missing out on the trends here. But we're seeing apartment pricing come down for 1 month here. All right. Now, I don't think this is some sort of crazy thing to be running for the hills and dump all of your condos. Quite the opposite, but you need to remember that we're trying to add more supply to our market, all right? And in 2023, we had just under 20,000 starts for new properties. Well, half of those, 50%, were multifamily apartments, all right? So in the coming years and in the previous years, as all of these condos have been built, this supply is hitting the market and it's going to acutely affect this asset class more than it will affect the other ones, all right? It's easier to add an apartment condo unit than it is to just go and build a house, all right? Builders make more money, the less approval delays, less time frame, all that sort of stuff, which is why you're seeing more and more of these multifamily condos, all right? So this is something we're going to need to watch in the months to come here to see what that's going to mean for our overall market, okay? And that's our update here for this month. I hope you've enjoyed it. It's certainly interesting. I'm very keen to see if we see another interest rate cut and what that will mean for next month. If you've got a house to sell or if you're in the market to buy, please reach out, use a Redline Realtor. Thanks very much for your business as always. I hope you're enjoying the beautiful weather, and we'll see you guys next month.